Hello and welcome to another episode of Well Capitalized. I'm your host, Bobby Kingsbury. With me again is Senior Managing Director Mark Mansour. Mark, today I'd like to focus on a little bit of the softer side, and that's entrepreneurs as they look to exit a business, considering their employee base as they think about potential sale. Most entrepreneurs, a lot of entrepreneurs, consider their employee base extensions of their family. They've been with them for a long period of time, 20, 30 years almost. And as a business owner, how do I get comfortable with a potential sale to a private equity fund that my employee base will remain intact?
So, first of all, let's talk about the nature of the business and the nature of the buyer,
Mm-hmm.
because that will will weigh heavily on what happens to the employees.
Sure.
So, I'm going to speak from an MCM Capital perspective, and then we'll talk about it in more generalities. So, the types of businesses that we acquire tend to be very unique in their capabilities. We're not looking to do roll-ups or consolidations, so we're buying standalone businesses that where the employee base is critically important to the company's ability to deliver their service or unique product offering. From our perspective, we're buying the business that has hard assets and human resource assets. So it's very little change. If anything, what we're looking for is how do we create career paths and opportunities for the existing employee base so they can earn more money,
Yeah.
so they can further their career. So that's how we think about the business post-transaction. And by the way, this is something sellers should be asking the buyer
Sure.
during the diligence process. What are your plans for my team?
Yeah. And we talked
And
about the diligence process in prior ones, but it should be reciprocal too.
mhm,
Sellers should also do diligence on
on
the buyer.
for sure. The other thing I would proffer is we don't cut benefits in the businesses that we acquire. So if anything, we expand
Mm-hmm.
the benefit programs now, either through incentive comp plans at the floor level on up through the senior management team or equity awards, et cetera. So almost, I can't think of any circumstance where the businesses that we acquired, the ownership base amongst the management team didn't become more diffuse throughout the team. Okay, that's MCM Capital. Now let's talk about it in the nature of the business. It could be a business, and I'll throw something out there and say it's a metal stamper,
Mm-hmm.
or it's a commodity-oriented business. And the buyer, whether it's a private equity firm or a strategic, is looking to affect a consolidation in the industry. And again, these wouldn't be businesses that would be a fit for us. In those circumstances, depending upon the business that it's being combined with, all bets are off
Mm-hmm.
as it relates to the management team. So it's almost a certainty in those situations. The combined entity will have fewer employees than the two businesses in total prior to going in. And so it's a valid concern. The buyer, sometimes can be a strategic. And in particular, if it's a strategic that competes in some manner, shape, or fashion with that, with the acquired business, it's not unusual that there's changes generally at the senior management level more so than in the rank and file, but sometimes throughout the organization. And those changes are typically to put their people in place to run the business. So that is not an uncommon situation. So in any case, the nature of the industry, the nature of the buyer will have an impact on the employee base on a go-forward basis.
Thank you, Mark. I appreciate it.
You're welcome.